Gold is shining once again this morning. Spot prices touching all-time highs as the dollar index sits around a two-year low. Gold mining stocks rising as well. Here to talk about gold's latest technical indicators, Robert Sluymer. He's managing director of technical strategy at Fundstrat Global Advisors. It's been a long base being built for gold, so long. I mean, when did it last? It's now exceeding levels hit in 2011, and I think when people thought it was going above 2000. So it's been about 8 years of, it retested, gave back 50% of that move, and then it's built a long saucer bottom. This is not surprising, then?
I think it's just a very big, bullish, long-term technical profile. I think, obviously, in the near term, I think gold's a little bit stretched. It's had a pretty big surge here. Cryptocurrencies are starting to rip to the upside as well. But I think you really got to step back and look at the longer-term picture. And as you just described, Joe, trading in a big 10-year base and starting to accelerate at the higher end of that range, aside from some near-term pullbacks, that's pretty bullish technical action. So I think we want to be long gold. We want to be long gold stocks. And I think there's two tailwinds here. One is, obviously, real rates remain negative. That's a huge tailwind for gold and the dollar. So you've got these two tailwinds behind it, and I think the pattern's legit. So I think on pullbacks, we want to be buying gold stocks.
So the dollar has seen its highs in the last 8 months or so. For how long?
I think it's a longer-term peak. It's probably measured in years, Joe. We've seen highs well over a decade ago, another higher high or lower high over the last sort of 10 years, and then we just had this peak here in 2019, 2020. So I think the dollar heads lower. Again, I think it's bullish for gold. I think the real rates is very bullish for gold. The other part about the dollar is I think it's bullish for cyclicals.
Bullish for cyclicals. But you think tech, we'll switch gears a little, tech has had a great run, pullback to be expected, but then you think tech needs to be in most portfolios along with cyclical, like a barbell approach?
Yeah, I do. I know it's a cliche statement to be making, but it's actually been working very well. We have technology as long-term leadership. There's not a lot of evidence to make a case that it's over. I don't think it's over. And so they've certainly run. A lot of the weekly indicators, they tend to track 1 to 2 quarter shifts. They're overbought. You're starting to see some pullbacks. You're starting to see some trend breaks. So there's signs that you're getting a little bit of a consolidation or a pullback. But I think it's really early to be making any kind of technical statement that is a big long-term top. I don't see that at all. I think it's a consolidation, and I think we're setting up for a rotation back towards cyclical stocks. And I think the dollar's a bit of a tailwind in here for that.
So what you leave out, the middle of the barbell is what, safe stocks? Like what?
Yeah, utilities and staples, there's certainly names in those sectors that are going to work. But in general, we want to be underweight safety, staples, utilities, overweight more cyclical areas. And then on this pullback, we're going to be wanting to add to a lot of the tech stocks. Amazon, Facebook, Netflix, for example, are just breaking out or just broke out of 2-year trading ranges. When they come back in, it's going to be a very timely entry point. I think at some time, probably more like September, October.
So you like the mining stock, like back to gold. I think you made the case that the basal average for the last 10 years or whatever is 1,500. So a double to 3,000 would not surprise you. Is the way to play it with bullion or with gold stocks or ETFs?
Well, sure. I mean, all this stuff, these are paper assets, right? The GLD, the gold stocks, but that's probably what most of us are limited to. So the GLD still looks fine longer term, particularly on near-term DICs, but the GDX, the large cap gold ETF, still looks pretty timely from a long-term standpoint, and so do the juniors.
You don't have you're not looking fundamentally at what's going on with gold. For you, it's as simple as the money printing, I guess. Do you think it has anything to do with COVID or vaccines?
Oh, boy, Joe, finding out the reasons of why the markets are doing things, that's always a very slippery slope, particularly as a technician. But I think it's a function of real rates, and the dollar going lower is just I think it's meth for gold stocks and the gold.
That's the wrap. It doesn't give you any income. Yeah, really? What does? Nothing gives you any income. So gold is on a relative basis.
Gives you price appreciation.
Right.